Assalamualaikum and good morning. My name is Muhammad Fahim and my group member Amirul, Faizul, Mudrika, Shafi and Farizat. Today we are going to present on weekly assignment 8. The question is, on 1st January X1, a newly incorporated company bought a machine for 5 million ringgit. It is depreciated at 10% on a cost per year. A tax expense of 50% of the cost of this type of asset can be claimed against tax in the year of purchase and 20% of its tax-based opening balance thereafter. The rate income tax can be taken as 30%. We are required in respect of the above item of machinery calculate the deferred tax charge and credit in the company's statement of profit or loss for the year to 31st December 20x1, 20x2, 20x3 and the deferred tax balance in the statement of financial position at the date. First of all is we need to find the computation of accounting base from 31st December X1 until 31st December X3. Now for X1, we will take machine amount 5 million ringgit minus depreciation of 10%, which is 500,000 ringgit, equal to 4.5 million ringgit. So now we compute for X2. We will take the amount of machine from X1 until X2, where 5 million ringgit minus depreciation of 20%, which is RM 1 million ringgit, equal to 4 million ringgit. Same goes to X3, where RM 5 million ringgit minus depreciation of 30%, which is 1.5 million ringgit, equal to 3.5 million ringgit. Next, tax base computation, same as accounting base for 31st December X1. The tax base is 50%, so we take 5 million ringgit minus tax depreciation, which is 2.5 million ringgit, equal to 2.5 million ringgit. For X2, tax depreciation is 20%, so same amount, 5 million ringgit minus 70% of tax depreciation, which is 3.5 million ringgit, equal to 1.5 million ringgit. Lastly, for X3, tax depreciation is also 20%, so 5 million ringgit minus 90% tax depreciation, which is 4.5 million ringgit, equal to 500,000 ringgit. For the last step is to identify whether it is taxable temporary difference or deductible temporary difference. Now we are focusing on asset. To identify the differences, we will take accounting base minus tax base for year X1. Accounting base and tax base are 4.5 million ringgit and 2.5 million ringgit respectively. Since accounting base is higher than tax base, it is considered as taxable temporary difference of 2 million ringgit. Then that amount times 30% of income tax, equal to 600,000 ringgit. Same goes to year X2. RM 4 million ringgit of accounting base is higher than 1.5 million ringgit of tax base, equal to 2.5 million ringgit under TTD, times 30%, equal to 750,000. There is a brought forward of 600,000 in the year X1. Then we take 750,000 minus 600,000 equal to 150,000. Continue to year X3, where 3.5 million ringgit minus 500,000 ringgit equal to 3 million ringgit. TTDs times 30% equal to 900,000. Minus brought forward of 750,000 in X2 equal to 150,000 ringgit for X2 and X3. The difference amounts of tax component will be charged in tax expense. For journal, it will debit Sochi P&L and credit DTL 600,000 for year X1, followed by year X2 and X3 with the same journal for amount of 150,000 ringgit.
Fourth step is open T-Ledger. First, we open PPE account. So this company bought the machine for 5 million, it will debit 5 million bank and credit accumulated depreciation of 500,000. The balance carried forward is 4.5 million. Do the same thing for X2 and X3. The balance carried forward for X3 will be 3.5 million. Next, open the accumulated depreciation account. Since it is contra with PPE account, it will debit the account of 500,000. Do the same thing for X1, X2 and X3. Then open TTL account for X1. There is no opening balance, but for balance carry forward is 600,000. So it will occur tax expense of 600,000 in credit side. Same goes to X2 and X3. Lastly, open tax expense account. DTL account is contra with tax expense account. So the account for each year will be put in the debit side. For X1 600,000, X2 150,000 and X3 150,000. So it will occur Sochi P&L in credit side for amount 900,000. Fifth step is opening the abstract of Sochi after 3 years. We will take tax expense for X1 600,000, X2 150,000 and X3 another 150,000. Step 6. Open the abstract of SOFP for 3 years as well. We will put asset of PPE minus accumulated depreciation. Then we put deferred tax liability under liability for the amount of 3 years.
That's all for weekly assignment MFRS 112 Deferred Tax. Thank you.